Have you ever wondered how global financial trends shape our everyday lives? Well, you're not alone. Each day, countless transactions take place around the globe, creating a massive web of financial interactions. This is the world of global finance, a dynamic and complex system that impacts everything from the price of your morning coffee to the stability of nations. Within this vast system, certain patterns, known as global financial trends, begin to emerge. These trends, whether they're shifts in investment strategies, changes in monetary policy, or fluctuations in currency exchange rates, can have significant effects on our daily lives and the overall economic health of the world. Understanding these trends is not just for the Wall Street whizzes. It's crucial for anyone who wants to make informed decisions about their personal finances, or simply gain a better understanding of the world economy. So buckle up as we embark on this journey to unravel the mysteries of global finance. Before diving into the deep end, we need to grasp the basics. So let's begin our journey by understanding the fundamentals of global financial trends. In its simplest form, a financial trend is a pattern or a general direction in which financial markets, or individual securities, are moving. These trends are often dictated by factors like economic indicators, geopolitical events, and market sentiment. Think of global financial trends as waves in the ocean of the global economy. These waves represent the movement of money, assets, and investments across the world. They can rise and fall, ebb and flow, based on a myriad of factors. For instance, let's consider the term bull market. A bull market refers to a financial market where prices are expected to rise or are already increasing. Imagine a bull charging forward with its horns, symbolizing upward momentum. On the contrary, a bear market suggests a condition where prices are falling, and widespread pessimism causes the negative sentiment to be self-sustaining. Picture a bear swiping down with its paw, symbolizing downward movement. Another key concept is economic indicators. These are the breadcrumbs that lead us through the financial forest. They help us understand where the economy is heading. GDP, or gross domestic product, is one such indicator. It represents the total value of all goods and services produced over a specific time period. If GDP is on the rise, it typically means the economy is in good shape. Inflation is another significant economic indicator. It refers to the rate at which the general level of prices for goods and services is rising. While a moderate level of inflation is considered healthy for the economy, too much inflation can erode purchasing power. Then there's the concept of interest rates. Set by a country's central bank, interest rates can influence the flow of investments. Lower rates often encourage borrowing and spending, which can stimulate economic growth. Conversely, higher rates can cool down the economy by making borrowing more expensive. With these basics under our belt, we can now explore the global financial landscape's intricacies. So buckle up, as we're about to embark on a fascinating journey into the world of global finance. To understand global financial trends, we must first decipher the language of economic indicators. Economic indicators are like the pulse of the global economy. They provide a snapshot of a country's economic health, and by extension, offer insights into the world's financial trends. So, let's get our stethoscopes ready and listen to the heartbeat of the economy. First up is gross domestic product, or GDP. Think of GDP as the total price tag on everything a country produces in a year. It's like a country's annual report card. When the GDP is growing, the economy is in good shape. But if GDP shrinks for 2 consecutive quarters, we're looking at a recession. Next up is inflation. Inflation is like a stealthy cat burglar, silently stealing the purchasing power of your money. When inflation is low, you can buy more with your money. But when it's high, the same amount of money buys you less. Economists usually aim for a Goldilocks rate of inflation, not too high, not too low. And then we have the unemployment rate. This is the percentage of job-seeking individuals in the workforce who are currently without a job. It's like the economy's report on inclusivity. A low unemployment rate means more people are earning, spending, and stimulating the economy. But a high unemployment rate could signal trouble. These indicators are like pieces of a giant jigsaw puzzle. Alone, they might not make much sense, but put them together, and they paint a picture of the economy's health. And by understanding these indicators, we can anticipate financial trends, make informed investment decisions, and even predict the next big economic boom or bust. Just remember, economic indicators are like weather forecasts. They can predict a storm, but they can't prevent it. So, always keep an umbrella handy, or in this case, a diversified portfolio. Now that we've decoded economic indicators, it's time to see them in action. Global financial trends don't just exist in a vacuum. They affect everything, from the price of your morning coffee to the stability of your job. Now let's dive into this a bit more. Imagine waking up and heading to your favorite coffee shop. The price of your go-to brew has increased. Why? Well, it could be due to a global financial trend. For instance, if a major coffee-producing country experiences economic instability, the price of coffee beans may rise, and that increase trickles down to your morning cup of joe. Our lives are interconnected with the global economy in ways we may not always realize. Let's take your job, for instance. The stability of your employment can be influenced by global financial trends. If the company you work for relies on certain raw materials, and the price of these materials skyrockets due to international trade conflicts or currency fluctuations, it might affect the company's bottom line. This could lead to cost-cutting measures, and unfortunately, sometimes that means job cuts. And it's not only about your job or your coffee. It's about your retirement savings, the value of your home, even the cost of your groceries. When global interest rates rise, for example, it becomes more expensive for businesses to borrow money. This can slow down investment, leading to slower economic growth, which can then impact the stock market. If your retirement savings are invested in stocks, a global trend like this could affect your future nest egg. And what about the value of your home? Real estate isn't immune to global financial trends. If foreign investors pull out of the property market, it can lead to a drop in house prices. So, a financial event happening halfway across the globe can impact the value of your property right here. And finally, the cost of your groceries. If a drought in a major wheat-producing country leads to a poor harvest, it can drive up the price of bread in your local supermarket. As we can see, these trends have far-reaching impacts. But how do we keep up with them? Keeping up with global financial trends might seem like a daunting task, but it doesn't have to be. Imagine being in a conversation where everyone is talking about the latest financial trends, and you're standing there, clueless. Not fun, right? But don't worry, we've got you covered. Let's dive into the world of finance and explore some handy tools you can use to stay updated. Firstly, following reliable financial news sources is a must. There's a sea of information out there, and it's crucial to navigate it wisely. Renowned platforms like Bloomberg, Financial Times, and The Economist offer in-depth analysis and up-to-the-minute updates on global financial trends. They're like your morning coffee, essential to kickstart your day. Now let's talk about financial apps. In this digital age, a smartphone is more than just a device for selfies and social media. It's a powerful tool that can keep you informed about the financial world in real time. Apps like Yahoo Finance, Bloomberg, and Robinhood offer a wealth of information at your fingertips, from live stock market updates to personalized news feeds. However, it's not just about gathering information. Understanding it is equally important. That's where financial advisors come into play. They're like your personal finance tutors who can help you understand complex financial trends and make informed decisions. But remember, choose an advisor who understands your financial goals and can guide you accordingly. And don't forget about podcasts and webinars. They're a great way to gain insights from industry experts and thought leaders. You can listen or watch them while commuting, working out, or even cooking. It's like multitasking, but for your financial knowledge. So, there you have it. By leveraging these resources, you can keep yourself updated on the global financial trends. The key is consistency. Make it a habit to consume financial news daily, just like your morning coffee or evening workout. With these tools at your disposal, you can stay ahead of the curve. And who knows, maybe next time you'll be the one leading the conversation about the latest financial trends. Now that we've got a handle on the present, what does the future hold for global financial trends? As we gaze into the financial crystal ball, a few potential trends begin to take shape. Remember though, these are educated guesses based on current data and projections, not guaranteed outcomes. So buckle up for a trip to the future. Firstly, the rise of digital currencies and blockchain technology could dramatically reshape the global financial landscape. Think about it. Decentralized finance, or DeFi for short, has the potential to democratize finance, putting power back into the hands of individuals rather than large institutions. It's like the financial equivalent of David and Goliath, but with way more zeros and ones. Secondly, the role of artificial intelligence and machine learning in finance is likely to expand. These technologies are already used in areas like credit scoring and fraud detection, but they could become even more prevalent. Picture a world where robo-advisors are as common as human financial advisors. It's like Wall Street meets Silicon Valley, except without the traffic. Thirdly, sustainability and social responsibility are set to become even more important. As climate change and social issues continue to dominate headlines, investors are increasingly looking to put their money where their values are. This could lead to a rise in ESG, that's environmental, social, and governance investing. This shift could make profit with a purpose the new mantra of the financial world. Lastly, we may see a shift towards greater financial inclusion. With fintech companies making banking and financial services more accessible, we could see a world where financial empowerment is not just a privilege for a few, but a right for many. It's like the financial version of a superhero movie, but with less spandex and more spreadsheets. The future is uncertain, but with the knowledge we've gained today, we can face it with confidence. So whether you're a seasoned investor or a financial novice, keep your eyes on these trends. After all, the future of finance is not just about numbers, it's about people too. And who knows? You might just be the next big thing in the financial world. We've covered a lot of ground today, but let's quickly summarize our journey. We plunged into the fascinating world of global financial trends, a realm where numbers are the language and patterns are the narratives. We learned that these trends are not random or chaotic, but rather the pulse of the global economy, beating in rhythm with various economic indicators. We began by understanding the basics of global financial trends, where we learned that these trends are the aggregated financial behaviors of markets worldwide. They reflect everything from the economic health of nations to the confidence of investors. We saw how these trends are influenced by a multitude of factors, including economic policies, geopolitical events, and technological advancements. Next, we delved into the realm of economic indicators. These are the vital signs we monitor to understand the health and direction of our economy. From gross domestic product to unemployment rates to inflation and interest rates, these indicators act like the compass guiding us through the vast financial landscape. We then explored the impact of these global financial trends. We saw that they not only shape economies but also directly influence our daily lives. They affect the prices we pay for goods and services, the interest rates we get on our savings, and even the job opportunities available to us. Keeping up with these financial trends is vital, and we discussed various tools and platforms that can help us stay informed. From financial news outlets to market analysis platforms and economic calendars, we have a plethora of resources at our disposal. As for the future of global financial trends, we learned that they will continue to evolve with the changing economic, political, and technological landscape. But armed with the knowledge we have gained today, we are better prepared to navigate this ever-changing terrain. Understanding global financial trends is a continuous learning process, but every step we take brings us closer to financial literacy. So, keep learning, keep exploring, and remember, finance isn't as daunting as it may seem.